For many years, most junior mining companies have followed the same path: drill, publish results, grow the resource, and private placement, and do the cycle again. But from time to time, a different kind of story appears. A story that is not only about ounces in the ground, but about how to turn those ounces into a real mine. And that is exactly what we are going to look at today with Galleon Gold, a company trying to take a step that very few juniors achieve, moving from exploration to a real mine development, reducing risk from the start, and trying to generate cash flow even before building its own plant. If you are interested in mining investment and want to understand how real value is created in a junior company, this episode is for you. Welcome, mining lovers. This is Charlando de Minas, the Spanish podcast dedicated to mining investment. Now, in English. Do you want to learn? Subscribe. Do you want more content in English? Leave us a comment. The episode is about to start. Welcome to Charlando de Minas, the Spanish podcast dedicated to mining investment, today in English. If you are looking to have this episode in Spanish, don't worry. You will have a summary of this interview in the language of Cervantes. Today, we are joined by David Russell, President and CEO of Galleon Gold, which trades on the TCX Venture Exchange under the ticker GGO. The company is focused on the developing on the West Cage Gold project in Timmins, Ontario. The investment case combines an early defined resource base, a bulk sample program designed to reduce risk and generate early cash flow, and a strategic relationship with Pan American Silver, which brings funding, mine access, and technical support. David, welcome. How are you? It's a pleasure to have you with us today.
Well, thank you very much for having me on your podcast, and hopefully I can add to the understanding of mining, and specifically investments, at least on the Toronto Stock Exchange under GGO, and let you know what we have up in Timmins, Ontario, which is the West Cache project.
Great. But David, before we talk about the company and the projects, I would like to start with you. For the people who may not know you yet, could you please tell us a little bit about your background and experience?
Sure. Number one is I'm a degreed mining engineer. Got a degree out of the University of Montana at Montana Tech, and I started my career really in January of 1980. And I worked with various companies, but the first 10 years was specifically ASARCO. ASARCO was one of the major, we call them the wheels of industries. They had smelters, they had mines, that sort of thing, mainly in the U.S. And I worked for them in their open pit copper divisions down south of Tucson toward Nogales, Mexico. I operated several operations in northern Idaho and western Montana for them, but I got a vast range of experience of how to operate, how to engineer mines. Basically, it was like going to school for another 10 years following getting my degree. So I thank ASARCO for all the building blocks that helped me get started. The following 10 years, I spent with several different companies like Independence Mining, Hecla Mining Company, Meridian, Lac Minerals, which was then taken over by Barrick Gold. So I had a pretty good stay with some large gold companies. And then I went on to build a operation called Getchell. It was First Mississippi Corporation. We turned it into the Getchell operation. We were listed on the Toronto Stock Exchange and the Amex Exchange. And we built the operations up to between 200 and 300,000 ounces of gold. We found a new ore body there that had between 17 and 20 million ounces of gold. And by 1999 and early 2000, Placer Dome bought us out. And it was a bidding war with Placer Dome, Newmont Mining Company, and Barrick couldn't have that. So they bought Placer Dome out. So it was kind of a teardrop effect on how these gold companies were built. So I got a lot of experience working with Placer Dome, then Barrick, and that sort of thing. But then right around 2000 to 2002, I started building a private gold company called Apollo Gold. And we put in it some operating mines, and then we built a new mine. And the operating mines were Montana Tunnels near Helena, Montana, which was a 15,000 ton a day mining and milling operation, open pit. And it was gold, lead, silver, and zinc. And you made we'll call plate gold. It's not doré bars, but big plate gold. And that was about 70,000 ounces per year. Then we made a lead, silver, gold concentrate, zinc, silver, gold concentrate, and sent that to the Trail Tecominco smelter in Trail, British Columbia. We also had the Florida Canyon heap leach operation. It was a 100,000 ounce producer. And up in Timmins, Ontario, where we're going to talk about today with the West Cache, but it was the Black Fox mine, which is 70 kilometers east of Timmins. And this was eventually both an open pit and underground. It's a really good template for what we're going to talk about today from experience-wise. It was 85,000 ounces of production. And then right around 2010 or 11, we merged in with another company and built a bigger company called Brigus. And then I left and went on to other things at that time. But the mine is still in production. I went to Primera Mining and then to Rob McEwen at McEwen Mining. They're doing very well today. But what we did around, we'll say 2019, I did a lot of things in between privately, but Lisa Buchan, who is my executive VP of business development, finance, and whatnot, she and I got together and we used a shell company called Pure Nickel. And we changed the name to Galleon Gold. And this was the start of a brand new gold company. And what I used for the flagship assets was the TPW property, which is only 13 kilometers southwest of Timmins. And from my previous experience at Black Fox, I keyed into this project that I knew there was about 6 to 8 kilometers of area that there were no mines, but there were mines on either side of it. They must have hit something in the early days. And sure enough, I did a merger with that company and we built, the first building blocks for Galleon Gold. So, our target really is to build a brand new gold mine in the Timmins camp. And we started out by drilling in 2020, moved into 2021. And by February of 2022, we had 1.56 million ounces on the books. We turned out a PEA with robust economics at $1,700 gold. Today, we all look like heroes.
Yeah.
It's a great project, had good economics. And even though we had 1.56 million ounces, the PEA only addressed 940,000 ounces of underground ores, which the rest has yet to be defined as either underground or open pit. That'll come in a bankable feasibility as we go. So what's the value? Well, we had 387 million NPV value at a 5% discount. That's $1,700 gold. Today, it's well over $2.6 billion. So that was our start for Galleon Gold.
Amazing. No, it's an amazing experience that you had. I could recognize some of the projects that you talk about and some of the companies, which were really good and really showed the experience of the team that how to grow a project and become economical and valuable for investors. But let's focus now maybe with Galleon Gold. You already talked a little bit about that. But maybe for starters, what will be for you the main goal of the company? What is the priority to prove that West Cache can become a real mine? It's to generate early cash flow, maybe it's to keep growing the resources. It's a mix of everything. What is the main goal of the company today?
I think that's a good statement, a mix of everything. With my experience and my team's experience, number one is we're not just explorers. We can explore, we put ounces on the books, and we take projects through the development stage, and you have to start with permitting. We're very good at permitting. We showed at Black Fox we could do that, and we did that here over the last 3 or 4 years. We built databases, we permitted, we've got full permits, and we know how to finance the project. So the primary ultimate goal is to build a new gold mine near Timmins, Ontario. But to achieve this goal, you've got to have all the components or all of the above, like you mentioned. And this required an understanding of everything from drilling, the development, the modeling, the permitting, the working with the First Nations, And what we targeted first is, how do you bring a mine into production? Well, don't start it where you say, I have a bankable feasibility, and you drilled it from the surface. That may be a recipe to success, but it may be a recipe to disaster too. If you don't know what that ore really looks like, what's the real capital cost to drive the ramps, to develop underground, bring the power into the property, and really set up the mine for the future for success. And that's what we're planning on doing right now. Is we actually started the excavation on the surface. We're going to bring the contractors in the next month or so and start the underground development. And then we'll continue down to the first ore body, which is called the number 9. We'll set up 4 bulk sampling stopes, and we'll test mine 86,500 tons, and we'll ship it to a mill. So we'll have all the disciplines. We'll have the engineering, the development, what the costs are, what the capital is, what it costs to get it to that mill, which will be the Bell Creek or Pan American Silver's mill. And then we'll know what the actual outcome is. If you sent 22,000 ounces of gold, did you recover 20,000 ounces? What is the real recovery? So we'll have real-time data that goes into a bankable feasibility and into a final project stage.
Mm-hmm. I find it really interesting when I was reading about Galleon Gold, because it's not the typical junior story where only lives on real results, and you directly show in the previous answer how you are planning to do everything, and we will go through everything during this interview. Maybe to make it easier to follow for the listeners, we'll divide this interview maybe in 3 blocks. The first, we'll talk extensively about the West Catch, including bulk sample, geology, expansion zones. Then we move maybe to financial. And finally, we talk a little bit more about management. Let's start about the project itself. How you will describe West Catch today to an investor who is hearing about it for first time? And what makes this project special inside this district?
Okay, that's a great way to start. And I'll just pretend that who I'm talking to has never heard the story. Well, first of all, Galleon Gold's West Catch Gold Project is in the heart of the Timmins Greenstone Belt. That's key, that you have the geological setting for that. We are in the right along the Golden Highway. This highway goes for several hundred kilometers, and right along it, the old timers followed the gold ores. Now, the West Catch project hosts 1.56 million ounces, but we had to key in on it. We're close to the city. We're 13 kilometers outside of Timmins. We're right next to other flagship operations, which you may have heard these names: the Dome Complex, McIntyre, Hollinger, Pamar Mines. All of it adds up to 65 million ounces have been actually produced and sold along that highway over the last 80 to 90 years. There's still probably 80 or 90 million ounces to go. There's a tremendous amount of potential there. And within our project itself, we have the understanding of the exploration, the permitting, everything, but we can look to either mine on either side and say, hey, we've got great mines there, but we can't tell the market that, it's going to be exactly like it. But I believe it may be very closely related to it. It may have the host of many millions of ounces of gold, whether it's 2, 3, 5, or on up. Time will tell on that. But what we can say is the West Catch is fully permitted, fully financed, and it's the beginning phase of an advanced stage development that'll culminate with bankable feasibility, final permits, and then over the next 30 to 36 months, you'll see the bankable feasibility come out. You'll see the final permits filed, but you'll also see an as-built mine that is almost in production when we get to that stage.
Very interesting. I was looking now, which is the company value on the stock market, and it's over 130 million Canadian dollars. And I was looking how the company have revalue over the last year. And last year, it was around 20 cents. Now it's over $1. This means that it's 4-bagger, 5-bagger in a year, let's say like that. And the question maybe is, how much of the project values today comes from the known resources, comes from the known knowledge that you already have of the project, and how much still comes from the future growth potential that you are developing now?
Well, first of all, it's 100% owned. There's no royalties on this property. And the valuation, first I had mentioned, was $387 million at $1,700 gold. Well, now it's about $2.5 billion. So you say, okay, we got a 3 or 4 bagger right now. Well, the actual true value is probably more like a 10 or 15 bagger when you look at the current values. It seems hard to believe, but let me go back at the Getchell mine in Nevada. When we were working on that, we started at 50 cents a share. When we merged in with Placer Dome, it was $34.50 a share. That's a little more than a 3 or 5 or 10 bagger. It was huge. And we expect this to be not like that, but very close. And one of the keys here on valuation that everybody should watch for is as we develop this, we've got the team. Okay, that's the key, the people. And then the first 86,500, will it be 6 grams, 7 grams, 8 grams? We're targeting 8 grams. And what will the data coming out will be? And as you stage these out to the market, that will set the template of the next dollar going to $1.50, going to $2. So if everybody looks at it and say, oh my gosh, I already missed the run and it's a 3 or 4 bagger already, it hasn't even begun to run yet. So, and are we similar to the juniors that just drill? We are in the respect that we drill from the surface, but now that we're going underground, we should be compared, basically re-rated in the market for the actual development, because now you become an explorationist that is a mine developer that is going into production, and so people can see that. So the key milestones of the final permits and bringing the construction to fruition over the next 30 to 36 months really is the key to say, how do we define ourselves in the market as compared to just a junior driller explorer? Not that they're wrong. They have a certain set of way they're going to do business. We just have a different way of doing business here to bring a mine online.
Yeah, of course. And talking to be different, one of the things that for me, it was actually really different, and I wanted to ask, is about why do a bulk sample? No, it's one of the maybe most interesting parts. The major minor junior companies, the majority of them, they will focus mainly on drilling, mostly on drilling and drilling and drilling. But in your case, you are pushing forward with a bulk sample. Why you decide to move into bulk sample instead of focusing on drilling, and which value this provide to the company?
There's several different thoughts on, from geological and operational standpoint that you look at. Number one is, do you have mines nearby? Do you have mines on your property? Well, we have 6 kilometers of strike. We've only got about 2,000 meters drilled so far, but there are no mines right on our property. They're either to the north, east, or southwest. And you come to the town of Timmins, you've got all the major mines there. We have the Lakeshore West mine abuts us on our southwest boundary. They're a good template for what we're doing, but we need real-time data to show the market and work into a bankable feasibility study. Like I said, there's several cases that mines that have been very successful drilling from the surface. They may be on 12 to 25 meter centers drilled, then they drill it down to 5 to 10 meter centers. That is a good template. If you can actually go underground and say, yes, it was like we drilled, that's not always the case. And in our case, I want to actually de-risk this project. And that's why I'm going underground, is that we've got a drill that we pulled onto the surface 2 weeks ago to continue the advancement of the resource base and then start the underground work so we can de-risk it for the investors. The last thing I want to do is bring a mine online that we have no real data for drifting, development, blast open stopes, metallurgy. All the disciplines have got to be in there. And we say, okay, we've de-risked it. We can tell the investor we actually did the work. We have a mine that is partially built. We actually start building the real mine. And they'll say, okay, they've got the template. And then the investors can say, well, what's the risk? Do I have a 50-50 shot of making money, or a 30-70, or do we have an 80% chance to 100% of making money? We're going to put it in the upper bracket, the 80 to 100%. So that's really what differentiates us, and why we're doing a bulk sample is really to do it in conjunction with the bankable feasibility. But keep in mind, we will be drilling from the surface and we will be drilling from underground. So we'll have best of all worlds with 2 different sets of drilling that we can match with production itself.
Really good answer. After the bulk sample is successful, you are naming that you will be doing some drilling as well underground from surface. But what will be the next step? how you are proceeding after that?
How we're proceeding right now with drilling from the surface, going underground, there'll be a step in here. We'll have to make a decision. Do we want to go back to the ministry and say, look, we want to expand out on the permit, not just the 2,500 meters we told you, bringing the waste out of the underground, 86,500. But as we go to the final permits, we'd like to actually go to the south ore body area. We'd like to go to the west ore body areas and start developing and getting other additional information and developing other stopes. That will get us way ahead in the final permit. So when I get the final permit, I'm not going to tell the market that, oh, I'm in production. I'm going to say we're a long ways into the development already, and we've got maybe 40 or 50% as-built template within our bankable feasibility study. And to finance the final mine project is not a shoe-in, but it really helps when the bankers, because they always say the risk. That's what they look at. And if we've defined at least 60, 70% of the risk for the banks or the investor, I think we've done our homework way ahead of time on bringing a mine that's not going to fail.
Mm-hmm. You talked about now different zones that can be told as expansion, no? But where do you see the best chance today to add ounces quickly and to create real economic value faster for the company?
First of all, driving the ramp isn't going to advance the ounces until we get to the ore body. But with the drill on the surface right now, we're going to actually drill more of the top of the number 9 by default as we come through it. Then we're going to hit the south zone. Now, the south zone was something we hit at the last program in 2022 that we need to further. And we're on the 5th hole right now. Of that area, and every one has what I'd call pyrite, chalcopyrite, most likely the gold ores in the rock right now. So in the core, we can see it. That will add ounces quickly because it's new areas. We also have the area to the southwest, which is 2 kilometers from the Lakeshore West boundary that we've got to drill. And then we've got to go to the northeast and drill we can add. But we have to do one other thing. We have to add a second drill rig probably by mid-year. That will start infilling the zones called 1 through 8. 1 through 8 is a quartz feldspar shear, which is normal for the camp. Then the number 9 in the south zone are what's called volcanic units or sediment hosted. Kind of a different, but they actually recover in a mill the same. You get about 95, 96% recovery of the gold. Now, in infill drilling, let's say for 1.56 million ounces, can we infill and increase? The answer is yes. We're going to bring the grade up and infill areas that are not an inferred, but we're going to try to take most of the categories from the inferred stage into the indicated. And the reason we do that is that in the bankable feasibility study, you would like measured indicated, so that no inferred can go in the bankable study.
No.
So we're going to actually have 2 drill rigs on the surface, both new exploration to add ounces. That'll add quite a bit exponentially. And then infill drilling should add ounces with better knowledge in between ore zones that are not modeled and bring the grade up. That's what we're looking at right now. So doing, all of the above. And then underground, that is key. Once you get underground, we get right alongside the ore body. We will put 1 to 2 underground rigs. They're smaller drills than you see on the surface. And we'll bring the spacing from 12 to 20 meters down to 5 to 10. And what that'll do is it'll give a template within a confined area to say, okay, we've got the drilling from the surface, we've got the drilling from underground, we have the test mining of 4 stopes, and then we have the blastal stope because the mining technique's called blastal open stoping. So we'll actually have all the data sets together and say, is this a template that we can actually put it on the rest of the mine? That's one of the biggest goals here, is to actually expand on your resource-based knowledge, how you do it, how you confirm, whether it's indicated, M&I, that sort of thing on your categories. So anyway, we're trying to cover a lot of bases with the work we're doing right now.
Yeah, I see. And thank you for the answer, because my next question was about your current result is still mostly in infrared category, and how you will move this with some on-field drilling, or how much work you will put on that, and you already answer all of this. Before moving maybe to the financial side, Do you think that maybe the market is still looking the West Hatch as a project around 1.5 million ounces, while you internally, and I can see you during the interview that you already explained that, you see it as a much larger system? Do you think that it is still a way that the market recognizes Galleon Gold as a much larger gold developer?
I've had that question. This is a really good one. I'm glad you brought it up. Is it bigger than 1.56 million ounces? The answer is most likely yes. You can never guarantee it, but what I believe it is, it's probably going to be similar to the mines in town. Those mines were between 5, 10, 15, and up to 20 million ounces per mine. But that was over time, and that's what this will be. But for right now, I've had many questions from investors. How big do you think it is? And what I tell them, I said, we're going to build it to the sky. It's going to be a big deposit. So, does the market think it's 1.56 or do they think it's 3? I think they'd probably go with 3 for right now. So we won't get carried away. We have the targets. We know that if we infill drill, we move out a bit and we go to the south zone, we can probably make it to 3 within the next 30 to 36 months. Now, how much of the 3 goes into actual indicated or measured and indicated, that sort of thing, time will tell. But our main goal is to convert those categories because that's going to bring your overall NPV out. The more ounces that go into that category, they can be used. So it's a very large system. And we just happen to have a 6-kilometer stretch. And I might add again, we're only drilled on 2,000 meters on strike, 750 meters, and then we've got holes down to 900 meters in depth. But the majority of them is only 450 to 500 meters. So we're open. We can always say we're open on strike, north, east, southwest. We're open to the south, and we're open to the north. There's other systems to the north of us. And so we've roughly got about 8 to 10% drilled is all on this property. So the chances of adding a lot of ounces and going above the 3 million ounce mark that we think is a great target is very good.
Yeah, agree. Let's move to the financial side. One of the most interesting parts of the story is clearly the relationship with Pan American Silver. Maybe the question is, what is really the relationship and how do you work together? Because it's a part of the shareholders, and how much this relationship changed the risk profile of Galleon Gold in comparison with other junior miners?
Okay, first of all, I'd just start with that obviously Pan American Silver is a very large silver company. Through default over the years, they've ended up with gold operations, and they've kept those gold operations mainly because of the great cash flow off of them. And they've got the Bell Creek Mine and Mill, and that is roughly about 35 kilometers from us to the northeast. And then to the southwest and abuts us is Lakeshore West Mine. Each one is a major underground mine. And, if there's any words that I can use is this is a major game changer. When a big company sees what you're doing and says, can I participate? That is amazing to the market. And obviously the market keyed in on it. That's where, the investors ought to understand. We haven't really jumped into the 5-10 bagger yet. Pan American Silver had a big influence on the market. When they first came in, a while back for an 8 million convertible at 45 cents. And no warrants on it. They just took a shot and said, hey, we want to participate. We know what you have. And then I asked them at the same time, can we mill my ore at your mill? And they said, yes, we have capacity. Fact is, we have 1,500 plus tons of capacity for you to take out. Then this last equity issue, they did just a little over 11 million on the equity base. They would have done more if they could, but they couldn't. There's certain rules and regulations you have to stick with. So they put money on that end of it. But then when we went out to look for the rest of the financing for our project, they said, well, why are you looking elsewhere? Why don't we put the financing up? So they put a line of credit of 46 million for us. And so I'd call that a template of confidence that they believed in our project. Obviously, they had, I wouldn't call it insider, but they had a CA with us, a confidentiality agreement that allowed their geologists to come in and look at our modeling, everything that we've done. And they said, we love it. We want to be part of this because we've got the mill capacity. We need your ores. So anyway, the confidence level was there. They're helping us de-risk the project. And then the market looks at it and says, well, gee whiz, they're going to take you over. Well, I never look at that. What I do is I say, I'm going to build it to the sky. I'm going to build this big, and I'm not going to look over my shoulder. If somebody comes in and wants to take a position in the company or larger, buy you out in the future, that's usually what's happened to most of my projects. But what I try to do is get the full ultimate value for the shareholders before I make that move. So all I can say, it was a major game changer when Pan American Silver come in. The relationship with them is very, very good.
Mm-hmm. No, you already answered another question that I had, because and I am guessing that everyone is telling you this. Having a major like Pan American Silver seems logic, having the project next to them, that at some point they will buy out. But before to the buyout, there is a lot of value to create, and there is a lot of value to return to the shareholders. Maybe I would like to ask now, what is your cash position right now? And with this cash, how far you can arrive to the project, and at which point do you may need to raise money again?
Okay, that's a real good question. Juniors that are drilling are always running out of money. They always need money. So we thought a bit ahead, and we said, look, we need an amount of money that will get us through all the development from the surface, all the underground, get us through the actual mining and shipping and the custom milling. But we also need to pay attention to the drilling underground and the surface. And right now in the bank, we have a little over 80 million. And that includes the 46 million line of credit with that. So if we look at it, we said, okay, do we have direct cash 40 million? Then we have the line of credit with this. We are cashed out and financed for this project. Where it'll be, a push will be at the point where we bring on a second drill rig. How close to production or development ores that will be shipped into the mill that will generate additional cash? That would be the question when I bring on a second rig. Do I have enough capital to pay for that second drill rig and then the drilling underground? So pay attention after roughly about 9 months, will we need a little bit more for drilling? We're not talking adding tens to 20 million. We're talking 3 to 5 million, that sort of thing. But right now it says we have enough money, but then the cash flow post cost and capital that's needed for or that's going to come off of the ores that will be sold. Roughly, let's just say there's going to be probably at today's gold price 130 million in gold sold. Okay, we've got, let's say, 80 million to work with. The project 70 million. It says we have enough cash, but it's actually a timing issue of when the capital's spent getting developed, when the ores get to the mill, and when we need it for drilling. So maybe we can borrow a little bit more if we need it through time with Pan American Silver, or we go out and raise 5 or 10 million on equity. We'll make that call in 9 to 12 months. But right now, what I can say is I don't need any money. But you never say I don't need any money. You just say,
no, of course.
Now I don't think I need any money. So, when you're developing, once you're in full operational trend, you better be making money and not going back and asking the investors for more money,
of course.
That sort of thing. So anyway, we're in a very good position, money-wise, to develop this project and get it moving forward and getting the ore stream off to the Pan American Silver's Bell Creek mill. And like I said, that's only 35 kilometers from it, so it's a very short haul for our ore.
Mm-hmm. What time frame do you have in mind? Because you said that you will ask for permits, that you will have the bankability study. In which time frame are we moving for those objectives?
Let's say over the next 12 to 18 months, the time frame for building the underground, doing the 4-test stope, shipping the ore, and custom milling. So, move it out 12 months. There should be milling ongoing to start with. These are the development top cuts and bottom cuts will be shipped the ore to the mill, to Bell Creek, and then the big blast hole open stopes will follow. Each stope will be about 22,000 tons. So it'll go in spurts as far as that goes. So look for that over 18 months. Now, if we go on to further development, that would be in the south ore body, the west ore body areas, if we can do that. Then there'll be additional development ores as we drill it off, prove it out, and then start setting up mining. So that'll push you out maybe to the 24-month mark. But what we're saying is we should have the bankable feasibility out in 30 to 36 months. But at the same time, We're doing that. We will be filing final permits. So really, to be a bankable feasibility, you have to have those permits in your hand. So we'll be doing it, all of the above. It's kind of like how we start. Instead of just drilling, we do everything from environmental permitting, drilling, development, and we are cognizant of the fact we need the permits to actually call it a bankable feasibility study. So that'll all happen in 36 months or less. If we can do it quicker, we will do that. But right now we're on track. So our schedule, I think, it's never set in stone depending on what you run into because it's an underground mine. But right now we feel very comfortable in telling everybody that within 12 months to 18, we should be well into the ore body of number 9, shipping ores to the Bell Creek mill.
It seems that you guys will have a busy years to come. With all of this work to do.
Mining's never easy, but it's a lot of fun. I'll tell you what.
Yeah.
It's not all glitter, the gold and the silver end of it, but, the payday at the end of the day for yourself, and it makes me smile when I can tell the investors, we're not at $1, we're at $2 or $3, that sort of thing. I can tell them we've increased our value, and every step of the way, we're creating value for the shareholders.
Tell me a little bit about the agreement with the Bell Creek mill. I am guessing that Pan American Silver being part of the shareholder, this helps a lot, and they will put all the facilities that they can, to make this to work, right?
Right. What they've done to us is a couple things. They've offered the mill, and they will mill all our ore. They've said, "Can you deliver more ore?" And we said, that time will tell on that, depending on our permits, to do that. The other one is they've offered, if we need engineers, if we need geologists, they will share what they have with us, obviously at a cost, but they've said, we'd like to work with you side by side if we could. That really helps, and it actually sets the template for a good relationship to actually move projects forward. If I need a geologist, but I don't need one for the full year, I need one for 1 month to help log core, do an analysis, do modeling, that sort of thing. That's what we use them for. We just pick up the phone and call them. So I think that relationship's good. As far as the mill, it's a 5,500 ton a day mill. They're actually delivering 2,000 tons a day from the West Mine, and then from Bell Creek Mine itself, 2,000. So they're at 4. They're missing 1,500 tons a day. They need to infill. They need to infill that, and we can supply that. And like I said, they would not like a hiatus after we get done with the 86,500. They'd like to keep going. So we can't tell them we'll do that, but we'll tell them we'll work toward that goal. So anyway, economically, it's very good, but it's a major impact or a game changer really for us to have a mill where I don't have to go out and spend another $150 million building a mill right now. And then that template may be extrapolated into, let's say, once you have final permits to build a mine, that might be the next 3 or 4 years before we have an open pit or really expand out to say, I don't need to build that mine and I don't have to spend that next $150 million in capital. So it's not total game changer in the future. It just says I can defer capital on construction of a mill if they can take my ore.
Great. Let's move now to the management team. You explained a lot about your experience and your knowledge, but tell us a little bit about the other members of the team, and why do you believe that this team is the right team to take Wasatch from what it is today to production?
First of all, it's people. You've got to have the right people. You had to have worked with them before, hopefully, or they have to have a very good background. First of all, is Lisa Bumpkins, my executive vice president, helps me in all facets of the organization. She's just great. I've been working with her off and on probably for the last 12 years. And then Sonia Agostina, the chief financial officer, I've worked with her for probably about 8 or 10 years also. Great financial people. So I don't have to guess what they're doing. They're actually doing the right things. Now, operationally, that's the biggest part at the site. Ryan Lougheed, he's the chief operating officer, but he's actually really the manager on site. He lives up in Timmins, but he was my actual manager. Originally the environmental manager of Black Fox. He helped me permit that project. He helped me build it, and he operated it. So I've been working with Ryan probably since 2002. And I have all my trust in him. He makes the right decisions. I don't have to second guess what he's doing. I'm just the support team really for him, even though my background is operations, building gold companies, and that sort of thing. But I've got a mirror image of myself with Ryan Lougheed. So what he does is he utilizes the other people he used for Black Fox, whether it was surface operators, underground, engineering, geological. He uses all those for the facets. And you know what he's really good at is working with people like the First Nations. When you have consultations, he goes right to where he can sit down with them, talk to them, explain them, get them on our side. And he's done just that. When I called him and I said, okay, we've got the permits and we're ready to go. You've got the permit to take water. When are you going to start the surface? This was a month and a half ago or so. And he says, Dave, I've already started. I already got the management people there. And I said, well, that's what the answer I wanted. The first thing he did is brought in some of the, what I'd call high-level management guys that know how surface work is put together. First of all, they brought in 3.5 kilometers of 17,600 volt line, all the poles, everything. And as of Monday, or 2 days ago, they connected the power up. He did that all very quickly from mid-December until now. And then he started all the surface work. You have to pull all the organics off. And then you have to take the gravels and sand. You have to work with the water. You have to put a water treatment plant in. He's done all of that. And he's well on his way to the hard rock face. Now, once you get the ramp down through what we call glacial alluvium and get to the face, then you need the contractors. Well, he's already bid the contractors, and I believe there's 7 of them on the bid list that are turning in their bids as we speak. And he'll decide very shortly, and I'll help him do that. And we'll have some other consultants working on the bids. And then he'll bring in the contractors or the earthworks people to actually start drilling and blasting and taking the ramp down at 10% grade. And then roughly it'll be about 5 meter by 5 meter ramp. You'll do 1,250 meters followed by internal 1,250 meters. But the key is the people. That's where we started with the team. And what I'm describing is the team that he's put together, we've put together and worked together. We have team meetings. We call them team meetings where nobody's the boss of somebody. We all come up with the ideas. We work with that team. And that's where the success will be, is with this management team we have. So do we have the right team? I believe we have the right team to build this project and bring the next gold mine to the Timmins camp.
No, it's really nice what you explain it, and I remember Rick Rule and the big investors. They say people, and you just describe a really successful team in the past that it's replicating a successful story in the present, and this is what the smart money they said that should go. Then I really wish you guys a good success. But let's talk about, before to end the interview, what are the lessons that you learned from previous projects? You already said that you have been in Black Fox and you have been in another gold projects that they were successful in the past. What you are applying directly today to Westcatch?
You know, the first lessons is try not, if something didn't go right, try not to reinvent the wheel and do it again.
Yeah.
That's the easy one to say. But every project has different twists and turns as you develop it. And what you can do is put the best team together first and say, how is the planning? You definitely need to have a good plan, which we believe we have a very good plan. We use outside consultants like Nordman Consulting, P&E Consulting, that sort of thing, to help us make sure we don't trip over ourselves and do some of the wrong things right up front. But, the lesson that you can take away from other projects usually is don't make the same errors, but can you do it quicker? Can you do it cheaper? And one of the things we learned, let's say from the Black Fox, is how to streamline permitting. The ministry has their rules and you have to follow the rules, but you can start early on in a project. So in 2020, we started the permitting database for a phone mining operation, not knowing exactly what it looked like, but we knew all the pieces and the parts and the environmental, where it was floral and fauna, water, dust, noise. We did everything. So by the time we hit 2022, 2023, we had all the data in documentation ready to file with the ministry. That way you can cut, maybe not 2 years off of it, but you can cut maybe half your time down on the permitting by have the documents and what I'd say the right documents. The reason we did the PEA study, number one, is you can't really file for a permit to do a bulk sample unless you got a permit to show economics to the ministry. That's what we had to start with. So that was one big lesson we took from Black Fox. It took us a little longer that way. We learned. Have your documents ready to go. Have everything that the ministry is checking the boxes, dotting the I's, crossing the T's. And if you know their procedural basis, and you've got a guy like Ryan Lougheed, like I do, that can actually pick up the phone and call the ministry, call the people there, and talk to them about what they need, when they need it, that sort of thing. I think that's some of the biggest takeaways or valuable lessons, is structure, timing, and getting your work done ahead of time. Having a good plan. That's the takeaway from this one.
Great answer. And just for closing the interview today, if you had to leave investors with 3 key things to watch over the coming months, what would be the main catalyst for Galleon Gold to be?
Okay, the 3 one, it's multi, but we can get it down to 3. Let's look at number 1 is what you should look at is the updates over the next, we'll say 10 to 12 months for the development, the contractor development ramping. When we get to the ore body, we'll have regular PR updates. That'll be the first thing, is how successful are you? Are you on schedule? Are you going to hit the ore body within, let's say, the 10 to 12 month mark here? The second part is the surface drilling. That'll be very important, where we're drilling through the nine ore body onto the south ore body. How successful were we? That'll come up every 2 to 4 weeks. We'll have Agate Labs. They'll be doing the assays for us. We'll actually be putting cross-sectional views out of where the holes are. And I might add that we're already on the 5th hole in 2 weeks here. So we're having great success. The drilling's going very well on that. So the number 2 is the drilling on the surface end of it. Now, the number 3 is, we'll say roughly about 9 months out, or worse, 12 months out. We're at the number 9 ore body, and when we bring the 2 rigs underground and we start drilling. So that'll be another data set that we'll be turning out to the market. So over the next 12 months, you can imagine the ramp going beyond development, PR coming out, that surface drilling, PR assays coming out, cross-sectional views, and then the underground core rigs going in. We're right there when we say, hey, we put the underground core rigs, we're going to drill it off to 5 to 10 meter centers on the present 4 stopes that we're going to develop. So that's where we're going to go for the next 6 to 12 months. And by the 18th month, we should be delivering ores and having a lot milled and cash coming back to us. That's the big. Cash is king. And what we're trying to do is de-risk the project, and for the investor to say, hey, they're producing cash now. They can pay for some of what they were doing.
Thank you, David, for being with us today. We will be looking for all the news and all the communications that new releases that you guys will do, because we will be following the company over the next year and delivering everything to the audience. I really hope that you enjoyed this time, and we're looking forward to all the news and next update maybe next year.
Okay, well, thank you very much for having me. I can't wait to update you and say we're there. We're mining gold, and we're producing 20,000 ounces of gold, and cash coming in is 120 to 130 million. That will be a good day.
For sure. Bye-bye.
Okay, thank you.
Disclaimer. The content in Charlando de Minas is not an investment advice. Amadeu Bonet and his guests are not investment advisors. The authors may have interest in the companies mentioned in this publication. They may also have bias and not be impartial. The information in this publication and all the others in Charlando de Minas is impersonal by nature and should be considered as an entertainment product. The minimum risk of any investment mentioned in this video is 100% of the capital. Before to make any investment decision, contact to a financial or investment advisor or someone qualified with experience. These broadcasts are a narrative of my learnings in the world of commodities and mining investment. In this podcast, we will try to bring experts, professionals, and companies. If you like it, please subscribe. I am Amadeu Bonet. Welcome to Charlando de Minas.